But personally, I'm, wildly optimistic about what the customer is going to experience with the presence of insurtech in the insurance industry. And I think that's already true in many places. I think it will be categorically true moving forward. And if the customer wins, that's a wonderful thing and something we should all be celebrating. This is Fro from Beam Benefits, and this is the future of insurance.
Fro, we're breaking new ground here. You're the first repeat guest I've ever had on the show, and no pressure. You're opening the new season, and you're the first repeat guest. So, like, how this goes is either like there won't be a show, or there may never be another repeat guest, or it could become a regular thing. So there's a lot riding on your shoulders right now. I'm sorry.
I have like a cold sweat in my whole body just below camera, so
that's
the pressure's
totally
on.
Appropriate. Yeah, that's the correct response. Well, thank you for coming back on. I think a lot of people do know who you are, and if they've read the second book in the Future of Insurance series, they definitely know you. Shameless plug. And they may have already heard you on the show, but a lot has changed since both of those things. So can you give us a quick who are you, and then for the keen ear where they would have heard Beam Dental before, they didn't hear you say that in the intro, they heard Beam Benefits. So what's the shift? And you guys are like a year into expanding your offering and going after some different things. So I'd love to just kind of catch up on how it's been going and what's the latest with Beam.
Yeah, so my name is Alex Frommeyer. Everybody calls me Fro. Founder and CEO at Beam Benefits. And one of the updates since the last time we were together, my first appearance when we recorded, was at the time we were known as Beam Dental in the market. And with it, the company, both from an identity perspective and just what we woke up thinking about every day, was very dental centric. That was our foothold in the market, dental insurance, and really bringing digital infrastructure as one of the earlier insurtechs period, but certainly in the ancillary employee benefits domain space. And so dental's been our thing, long story short. And up until about 18 months ago, that came with a bunch of the challenges and opportunities that are provided inside what is, I think, a really exciting, innovation-oriented segment of the insurance market. But we are also, or are primarily, a customer-centric company. And as such, we listen to what our customers are telling us. And for years, really since we started putting our dental insurance policies in the state of California, which was our first live state back in 2016, we've been hearing about bundling and broadening our product mix in the ancillary benefits domain space, really because of its popularity with especially small businesses. And it's a preference of brokers and certainly of these very stressed, overworked HR admins that are trying to build robust benefits portfolios for their teams. So we had always imagined that we would expand beyond dental. The timing of it, exactly how you do it, was less clear. But we had added a vision insurance product a few years ago that's been just enormously successful. So we were already doing dental and vision. And about 18 months ago, we decided to really go for it. And our definition of going for it was a pretty meaningful product expansion for us. That's been 6+ new products over the past just 18 months or so. An expansion into life, disability, and supplemental health coverages, and scaling those into all of our states, which is 40+ ultimately, and doing that while also changing the company's identity from Beam Dental, which only communicates now one of the things that we do, to Beam Benefits, which captures really the essence of our company, small and medium-sized business employee benefits in a much more robust and comprehensive sense.
Yeah. Well, when we did the case on Beam in the book, you just added the vision option. So like I was like, well, they're still called dental, but I guess they're just ignoring that. But it's like the early days of Apple Computer selling the iPhone and then realizing, all right, we got to drop the computer part because that's not an accurate reflection of what we've become. Or maybe it was just like music at that point. I think it was pre iPhone. But anyway.
Yeah, the iPod might be out. Yeah.
Yeah. But when you talk about ancillary benefits, and then you mentioned a number of them, I figured it's not health, like core health insurance, full health insurance. And I didn't expect life. But is that a defined space of what counts as like ancillary? Yeah. So people people in this space know what it is, and me just being a PNC person, I'm like, I don't know where the line is drawn. Are there other things still that you're not addressing today, or is that really what the space is? Those 6 products that you moved into plus dental.
The way I think about the world is there's a notion of established ancillary benefits and then emerging ancillary
Mm,
benefits. And the ones I named, dental, vision, group life, short and long-term disability, and then supplemental health, which is accident, critical illness,
yeah,
hospital indemnity, those are all established ancillary benefits. There's carriers out there that have all of those products, others that are ambitiously also expanding their product portfolios to cover those. Those are generally well established products in the market. Brokers know how to sell them. Employers know to how to purchase them and to look for them in the offering. But there's this whole, I think, frankly, very exciting world of emerging employee benefits
yeah,
that are generational changes. So, preferences that are changing with a more millennial and Gen Z dense workforce. So,
yeah,
think mental health, telehealth, pet coverage. Those are all, I would say, emerging and growing very quickly. And then I think some emerging benefits are just new products. A product like, cancer coverage didn't exist, now it does.
yeah,
Mental health didn't exist as a standalone thing, now it does. And some of them are even non-insurance products, things that are maybe more in the wellness or quasi healthcare domain space, but
yeah,
themselves are not, um, you know, collecting a premium and paying a claim explicitly. So there's a lot
yeah.
of opportunity, I think, emerging just in the broader ecosystem.
Well, so when you said it's like exciting and innovative, um, I I I absolutely agree. I think actually employee benefits in that world is a space where we see a lot of not just tweaks on existing products. I mean, yes, there is that. There's always going to be that, but actually like thinking up new products addressing specific needs that are emerging amongst, a new generation of employees more so than PNC or like the core life space where or core health space for that matter, since like the HMO we haven't seen like these massive new ideas emerge out of, like cyber insurance was not even in existence 20-ish years ago. Now that's a core part of the market. Like I feel like employee benefits has that sort of like not laboratory, but creation space going on. Like there is much more room for innovation, like you say. So yeah, I'd agree with you. It is an innovative space.
There is a reason for it, I think, which is that employers want to demonstrate value to their employees.
Yeah.
So to some degree, the buying of benefits is less about protection and more about usage. And that creates some dynamism that doesn't exist in the explicit, like consumer led PNC markets,
Yeah.
where the customer is explicitly looking for protection. What happens if my house catches on fire? What happens if there's an unexpected death?
Right.
That sort of thing. Benefits is like, the employer wants their employee to use some of these products from time to time to
Yeah.
prove that they exist and that they're actually adding value to the employee's sense of belonging inside that business.
Yeah.
So there's a whole different set of variables and elements to the buying behavior. It's part of the reason why dental insurance is so popular in the employer channel, because people actually go to the dentist and file
Yeah.
claims and experience the product. And that makes the employer happy because then they can, as they provide dental insurance to their team, they can say, look, this is valuable and I know you value it because you're actually using the product.
Yeah. Um, I think it's really interesting, but I want to press on one thing before we move on. If there's something else that having you here in particular, I wanted to dig into, but the way you started, IoT toothbrush that beams the data into the cloud and then could be used for insurance. No insurance companies were interested. So I love your typical engineer idea. It's like, oh, we'll build one ourselves. So here you are, you built this dental insurance product and then built this benefits business more broadly. But I imagine you don't have an analog of your toothbrush in all of these areas. So when you think about how you started and what innovation meant as that starting point, are you pursuing something similar in these other products where there's like this kind of data IoT kind of attachment to it? Or is it like, look, that was appropriate for dental, but that doesn't have to be the only way that we innovate or we grow this business going forward? Because that's a strategic battle that, like, which path do we take, and are we being true to what we said we are, and does that matter, or what?
Yeah. We're a very first principles business. And as such, we want to be listening to our customer to determine what products to build. And then we also want to be listening to our customer, but maybe at a different level. It's what they're not saying,
Mm,
or it's what they also mean when we talk, that doesn't just inform the product to build next, but it informs how to build that next product, or what should be accompanied with that product to make the experience truly differentiated.
yeah.
I think we demonstrated this with dental, where the dental insurance product pairs very nicely with this idea of a dental wellness program, which is what the toothbrush and the program that we built around it collectively does. No one asked for that. We listened to how the customer positioned their thoughts on the dental industry and how they engage their at-home dental care and their dental care at the dentist, and
Yeah.
put those ideas together to create something totally new. And my sense is that whether it's hardware slash IoT or something else, we will continue to mine for those features to add to all of the products that we do. We've got some very unique features that will add to, for example, our disability portfolio over time, that will go beyond what a disability insurance product does today. But we're starting with a high quality disability product,
Yeah.
and then adding features to it that are some of those results of listening to what the customer is really saying, and some of the things that they aren't saying as
Yeah.
we continue to listen to them.
Um, so here's how I'm going to segue to the other thing that I wanted to get you here for, and hopefully it ties together. When I had you here last time, you had literally just come out of a meeting where you and your team were reviewing the 10 priorities for the year ahead, and you had gotten some customer feedback, customer insights that suggested some of them needed adjusting or replacing, and so you did. And that was this moment where I was like, I would bet on these guys, these folks, because you were so keyed into and willing to adjust based on what your customers were saying. And I think so often in the insurance industry, but I think human nature more broadly, especially in established places, when a leader says like these are our priorities, even if like we're putting on our bathing suits and tank tops and getting sunscreen on, and you look outside and it's pouring rain, it's like, and we're going to the beach. It's like, but it's pouring rain. Nope, we said we're going to the beach, and that's the right answer. Like, to not have the humility to recognize, like, you know what, we weren't on the right thing, or our sense of priorities weren't stacked up correctly based on what the people who need us are saying. You just had this, as a company, had this willingness to take that in. So that's the segue. I am so curious about, how it's gone since you made that shift, but also the fact that you mentioned you were in market 2016. That's early days. InsurTech was barely a word at that point. The connected self and like all the things you were doing with IoT was also barely a thing at that point. But since we talked to today, a lot has happened in the InsurTech space. Some of the players aren't around anymore, or they're shells of what they used to be. Funding is not what it was when we talked last time. There were a number of cases in the book that like, we just raised $200 million, or one had raised 400 million. Like, it was a very buoyant time for InsurTech, and then it wasn't. But you're still here. You've been growing, you've been expanding. I'm really curious for that perspective, and specifically from someone who's been living it, because we've talked about this before, like plenty of shade being thrown at a few specific players in the industry in general, a lot of bemoaning of the investment kind of environment and climate. But it's not often that you get to hear from the people living it that have survived through that have thrived. So I'm curious about what you have to offer around that, like what your observations have been, and why do you think Beam has been able to endure and do well? And what's your take on the tough period that InsurTech is sort of, I think, coming out of, and maybe made us stronger for it? Like, it's not that dissimilar from what happened to .com in '99 and 2000.
there's so much that's happened so I think you're right to point out that is both like micro, like all of our companies, right? Insurtech companies have all developed and changed, and then there's the macro, which is like what's the state of play of insurtech broadly? How's it fit into the broader ecosystem? And then of course the tech industry, even more broadly, is going through one of its toughest eras here, at least over the past quarter century or so. And so I think there's a lot of intertwining and overlapping considerations. But maybe I'll start with just a couple notes on Beam, and then I'd love to just kind of create some space for the insurtech question, because we are at a very interesting, I think, moment in the development of the movement broadly. So Beam's efforts to expand to become Beam Benefits is both an identity shift and, of course, a product shift. And the short answer for us so far is that it's going great, meaning that we feel like we are on or even ahead of plan on what I say internally is just becoming Beam Benefits, which sounds really easy because you can just start saying Beam Benefits instead of Beam Dental and change your email address and feel like you've accomplished it. But to get it to land from an identity perspective, both internally with our team and then certainly externally with our brokers, our partners, our customers, that's an entirely different thing. So we gave ourselves basically a 2-year time window to become Beam Benefits. And we're nearing the end of that 2 years. And we feel great about the market's reception, the fact that it is definitely getting embedded into the heads of the people that really need to understand that we are Beam Benefits and no longer Beam Dental. And it shows up in the numbers and it shows up in the sentiment as well. So why has that worked is a question I reflect on a lot, and not spiking the football because there's still plenty of work to be done to truly become Beam Benefits. But now that we have, I think, a little bit of blind sight and some success stories under our belt, we definitely have strong views about the B2B versus the B2C markets in insurance. And I do think benefits, because of what we talked about earlier, is more primed for dynamism, new product introduction, than maybe other segments of the industry.
Yeah.
One key factor is the broker. What we found, if you go back to 2016 when Beam was first introducing Beam Dental, arguably the hottest startup, not just in the insurance space, but in maybe just tech in general, was Zenefits.
Yeah.
And Zenefits back then, which was like the rocket ship company of that era, was trafficking around pretty aggressively an anti-broker message to the market. And I think there were strategic reasons for it at the time. They really thought they could automate a large portion of what the brokers did and that sort of thing. And so that was a very central part to their thesis and their growth journey at the time. And when Beam came out, we were decidedly pro-broker. And I think from the early days, we got a different reception from the brokers who I think were expecting us to be more like a Zenefits than we ended up being, in terms of how we treated and engaged them. And I think that served us well. What we found is that brokers really only wanted us to change one thing at a time. Like, please innovate, because I need innovation, I need differentiation, but just do one thing at a time. That's what I can learn as a broker and what I can translate to my clients.
Yeah.
So if you innovate, frankly, if you do too many new things, that's actually going to work against you rather than for you.
Yeah.
And I think that throttling at the time I viewed to be a net negative, because I was really eager to go, change everything and make everything better. And what about this problem? And what about,
it's hard to hold back.
It was really hard to hold back. And I don't think we did it perfectly either, but in general, we partnered with our brokers and took the time to, I think, more methodically change one thing at a time and let it kind of settle and marinate, and then move to the next thing, and then move to the next thing. And I think that served us really well, because when it came time to become Beam Benefits over these past 18 months, we've both moved very quickly toward new product introductions and these identity changes, but they've come with that same sort of methodical seasoning process.
Hmm.
And we found that that just works as a technique in our market, our slice of the insurance world, to not just do something, but to really get it to work and to land and to be effective in the market. And so as I reflect on maybe growth techniques that haven't worked as well amongst early insurtechs, one common theme you would observe is an interest in maybe changing so many things so quickly, the product or the experience becomes unrecognizable, which
Yeah.
actually ends up working against the very innovation that you're bringing to the market.
Yeah, that's an excellent point. Even if you are direct, it's for a product that people aren't like head over heels about and super engaged in and, thinking about actively, to change everything may be necessary, but maybe more than anyone's willing to put the time and effort into even comprehending. So they're like, that I'm just going to like, that looks like what I have now. It's a little bit cheaper. I'll just go with that versus this new thing that may be better, but I just can't.
Remember that you're, as an insurtech, you're likely competing against a company that has insane name recognition and insane financial stability
Yeah.
from the customer's perspective. So if you change 15 things, even if they're really innovative changes to the product experience, the customer might view that to be so different as to be skeptical of it.
Yeah.
And then the alternative is like, or I could just go with Prudential,
Yeah.
which is like,
Yeah.
I know, Prudential's going nowhere. It's kind of the devil, It's a very easy argument for the customer
Yeah.
to make.
Yeah. It's the whole like no one got fired for buying, GE stock or whatever. Like now you might have, or Berkshire Hathaway maybe is a better one to say at this
Yeah, let's
point.
use
Anyway.
Berkshire. Yeah.
Yeah. All right. So that was the Beam part, but then kind of thinking out to InsurTech more broadly. What's your perspective there?
There's definitely going to be I think, transition between eras like we see in other tech topic areas. There's the, phase one companies that give way to the phase two ones, and the phase two ones learn a ton. The second generation companies learn a ton from the first generation companies, the things that worked, the things that didn't. I think we're just at that point in the insurtech world. And that, the negative effect of that is there are a lot of companies that will, struggle, underperform, maybe even go away during this era. But when you look at aggregate employment in insurtech companies, continues to go up.
Yeah.
And there seems to be a lot of resilience in the number of new companies still coming into the insurtech space, which I think has actually been quite impressive to see. And I think third, and this is probably the most punchy observation, is I think we are somewhat severely doing a disservice from a storytelling perspective about insurtech and its value creation capability, because of the maybe environment and certainly just the way I think loudest voices in the industry are positioned, as we sit here today. What I mean by that is you can take something that is actually a pretty natural part of the innovation process. It's sloppy, it's chaotic, there's a lot of failure, there's a lot of, there's sometimes even fraud. There's a lot of stuff you can point at and be very dismissive of. But that's actually quite natural. And you can either look at that as natural and normal, and you can provide, the positive counterexamples to all of the problematic things happening in a broader movement, or you can stay focused on the things that aren't working. And I think we're a little too focused as a industry on the things that aren't working. And I don't know exactly why that is, because I think there's also some great examples of amazing collaborations between old guard, established incumbent insurers, and really dynamic, innovative businesses. I think Beam has a great track record of these sorts of partnerships ourselves. And I see that in actually a lot of other places in the industry. So my sense is that we aren't giving ourselves enough credit as an industry broadly to just trust that there is going to be a second gen, that these markets are huge, that the customers want new innovative features, and whether those come from the incumbents or brand new companies or some mix of the two, that this is like all good stuff and we're going to be in a better place in the next 10 years than we were 10 years ago. And I think that's almost for sure true. But that does seem to be a bit of a missing voice at the table right now. Many founders, this is just my sense, I haven't actually directly asked any founders this, but my sense is that founders of insurtechs are spending a lot of their time either heads down building and not
Yeah.
trying to provide that voice, or to the extent that they are speaking out, they are kind of forced to be on the defensive
Yeah.
version of that storytelling opportunity, instead of something that's perhaps a little bit, balanced, vulnerable, and humble, because I think a lot of us have been humbled by the environment, but also, there is real value being created, and not just in one company or one area. I think this is
Yeah.
actually right on schedule in many ways.
Yeah. I think it's a microcosm of society as a whole, and certainly US society, that we are very negative and point fingers and blame and make an example out of, the horrible people over there. And that's what sells. And so you get caught in that trap. But hosted a ton of panels, and, invariably like one or two of them will have the insurtech person sitting on it. And sometimes it's been you and, some of your friends from the Columbus area as well. Where I feel like, yeah, sometimes they're put on the spotlight to answer for the whole space. And it's like, well, hang on a second. Like, just because we're both called insurtechs, my business has absolutely nothing to do with that company over there that you're citing from the news. So why is that even relevant here? That's a company, that's not an entire space. And there's a lot more to talk about. And there's plenty you can take from a company that's not doing well. Like, you can observe, and there's always something they're doing well. So it doesn't just have to be this kind of like nastiness discussion that it can devolve into.
It's a fascinating dynamic, and one that I think is just a blip on the radar. It's a growing pain sort of thing.
Yeah.
But personally, I'm, wildly optimistic about, what the customer is going to experience with the presence of insurtech in the insurance industry. And I
Yeah.
think that's already true in many places. I think it will be categorically true moving forward. And if the customer wins, uh, that's a wonderful thing and something we should all be celebrating.
Yeah. I think that's really well said. Um, I, I appreciate the positivity around, like, it's a moment and we will move past it, and customers, I think, will win. Maybe not as fast as they could if we didn't have to do things in as measured a way as we had to, or, people were more embracing of change at times, which is a tough thing. Um, do you have a general sense, other than like, I think it will be better? Are there things on the horizon? I got to tie into the future of insurance, the title of it. Um, Things on the horizon that you see changing that you're excited about, or, obviously, word of the day for the past several months has been ChatGPT. So, like, whether it's AI or anything else, are there things brewing that you're like, that's really interesting, that could be a driver of change, or that could be something that we take in and it helps the industry going forward?
My framework for this would sit along two axes. I think on one hand, there's insurance as a mechanism to identify risk, size that risk, predict that risk, and then protect that risk. Very core to the product itself. And then I think on a separate axis, there's like experience. That's like features, how products are engaged with, the brand, the feeling, the buying process, the usage process. And I think we've seen companies that exist along kind of both sets of those axes, and some have incorporated elements of both from an innovation perspective. An interesting question is, where might there be more innovation over the next 10 years, will it be on that risk axis or on the experience one?
Uh,
Or you could make arguments for both or neither as well in there. My sense is that if AI materializes even to a healthy fraction of what it's being promised to
yeah,
deliver, you're going to see a lot of action on that risk axis. The ability to incorporate the data, organize the data, truly underwrite effectively with that data, to do it in a cheaper, faster, more automated way, and then scale it to much more precise risk equations
mm,
is a really exciting idea.
yeah,
For example, the way we regulate insurance today is still pretty generic, and I don't mean that to sound super negative. It's just kind of how we calculate reg cap, for example, is like a ratio of how much capital you need to have on hand versus how much capital you've written in premiums. And that's it works, but it's not particularly precise. And there's the reasons for that. It's very difficult to accurately and get to that precision. But if we have better tools to size the risk and identify the risk, we can be much more dynamic about reg cap requirements, just as one small example. Certainly, all of the changes to payouts and propensity and severity around weather events is a very clear opportunity where better and bigger data sets being crunched differently can just fundamentally change the way we think about those products
yeah,
at a very foundational level. The experience axis is perhaps the one that I'll spend more of my next 10 years in, for example, because I think it lends itself to the benefits world, for example, more um, precisely. And I think that will apply to a broader set of teams and individuals and skill sets, because experience shows up in so many different ways. It's the buying process for agents. It's the portals and the mobile experiences for different customer
yeah,
constituencies. There's just so much to do in experience to frankly catch insurance up to where other consumer industries already are. And I would say that we will see a lot of activity along both of those axes. But there's one big catalyst out there, which is if AI is going to come through to bring a big leap forward in capabilities, some sort of 10x
yeah,
growth opportunity, that would really make that risk part of the insurance business look potentially quite a bit different,
yeah.
just in the next few years.
I agree with you on the both, and I agree with you on the risk side, because that is, people have heard me say this, like, I'm all for efficiency. I love CX. Those things are, I mean, the efficiency struggle as an industry, like, we haven't moved expense ratios despite like investing billions and billions of dollars to do so. Um, but like, I'm a consultant. I like efficiency. I'm good with that. But you don't efficiency your way to profitability in this industry. And at least in PNC, we just keep seeing like another giant carrier is already at their cat threshold for the year, and we haven't had any storms yet. Pulling out of the state, not writing new business, and that, like, that's a regular thing every week. You can't, like, if you carve out 2-3 points from some efficiency project, or you make the customer experience that much more efficient and your sales goes up a little bit, your retention goes up, like, those are all great things. But if you're writing at a 140 combined ratio, so you're writing at a 137, like, that's even the customer lifetime value side of
It's
that.
moving in
It's
the right
it's
direction.
not, yeah. And so that's where it has to, like, it's an indemnity story ultimately. If you're not changing the way you evaluate risk, price it, control it, respond to it, and the cost of actually when the risk plays out, how you manage that indemnity once it's realized, that's where the real game is. And that's my hope for AI is like that it actually address, like, that's the real product. Customer experience, hyper important. I'm not downplaying that at all. It's just like, let's just remember, you can't squeeze efficiency and CX points forever. You have to ultimately get to like making the product better.
One perhaps less obvious effect of success in that domain space would be on the risk parameter, would be that startups in the insurtech space would be able to get far further along while raising a fraction of the capital that they have essentially been forced to raise to meet things like reg cap requirements and to set up these entities. And so one of the things one might observe about where we're at in the insurtech 1.0 to 2.0 transition is that many of the 1.0 companies raised too much capital.
Yeah.
Pushing up valuations to then find themselves behind the eight ball because of that. And again, it's a thing that we can tell that story in two ways. We can look at it and say, look at this, irresponsible capital raising from, such and such a company with such and such a DNA to it. Or we can tell that story in a slightly different way, which is in InsurTech 1.0, the only way to build a company and to give it an opportunity to get to scale and escape velocity meant raising hundreds and hundreds of millions of dollars.
Yeah.
But in the future, a company may be able to demonstrate innovation with $10 million because the rules of the game have been changed between then and now. And those changes would be indicative of a leap forward in AI, leading to a leap forward in risk prediction precision, leading to a change in reg cap requirements, leading to a different sort of capacity needed for an upstart idea. And that would be a wonderful, currently unanticipated consequence of, the maturity of the industry tied together with this other macro change that, is definitely happening. And so it just becomes a question of do all those ingredients, come together in just that sort of way or not?
Yeah. So when you see someone announce a $2.1 million Series A, don't just immediately go, oh, wow, that must have been really hard. Their business must not be great. They could barely raise anything. Be like, are they onto something? Have they figured out how to be much more efficient with their capital and they're raising differently? Maybe there's more to that story.
That's exactly right. And, we won't know until those stories play out, but that's why it's important that founders and entrepreneurs continue to be excited about the opportunities in the market, because we need more shots on goal if we're going to make progress as an industry.
Yeah, well said. Fro, we could absolutely go on for much longer. I appreciate the time twice, plus the time you put in for the book and coming to panels and other things that I did. It's always good to reconnect with you. Thanks for sharing with everyone.
Thanks for allowing me to be your second time guest. I feel incredibly honored, and I just bought another box worth of books to send out to friends to force them to read my chapter.
Thank you. I saw Spike and I was like, who's buying the second book? No one cares about Beam, but someone did. No.
There we go.
Well, thank you for that. Well, that's awesome. Thanks again for the time, Fro.
Good to see you.
It's always great to get time with Fro. I love that he's every time I've asked him, he's willing to give up a little bit of his time. So it's great to get some more of that. And we did just see each other, maybe a month before doing this recording. He was kind enough to sit on a panel that Nationwide hosted right there in Columbus for the launch of Future of Insurance Volume 3. Even though he's not in that book, he still showed up to support it and shared some of his perspective, which was awesome. I appreciate the story of everything you filled us in with what's been going on with Beam. There's a lot to take in from that. I think it is really interesting when you think about what allows for more innovation and more discovery of new product ideas that, in the benefits world that they're seeing. But there's clearly a message you can take in more broadly than just benefits. And he gave us that. But then to reflect on what's going on in the bigger scene with InsurTech and some of the challenges that space has seen, especially in the investment side. Maybe that's not a terrible thing, even though it also has been hard for many companies. We saw the same thing with tech 23 years ago, something like that. And, a lot of the companies that are power players in tech today did not exist before that point. And then, we have some that did, like, Apple, HP, Dell. But they look extremely different than they did that at that point, and in very different ways. Apple is the most valuable company in the world, and back then there were questions about whether they'd survive. Michael Dell famously made a lot of comments about that, and give the money back to your shareholders and shut the company down. And things sort of went in the opposite direction for Dell than they did for Apple, and Dell was taken private, and they gave the money back to the shareholders. So it's you never know how things will play out, but the tech space changed dramatically, and there was a lot of success in it, and there's been other hard times in it as well. I'm sure the same is going to be true for InsurTech. We will see some companies still around, we will see some that aren't, and we will see lots of new ones. And I think that's a great point that Pro left us with, is we need more shots on goal. So this is an important and interesting and exciting space. And if some of these tools play out the way that we're hoping they will, it could create more efficiency in the capital side, which means you can do more with less to change the game. And that's really exciting. And hopefully that lowers the bar back down for some new ideas to come to market and to thrive, because it's more feasible to do that. I think that's really exciting. So thank you to Fro. We talked about the second book in the series that Beam is in, along with seven other, there's 8 total InsurTech startup players that, they're all very different stories, are all super interesting, and there's lessons to take from all of them. There's also several that are from Columbus, which is interesting, or at least that Midwest area. So if you're curious about that, or the first book, or the third book, or more episodes of the Future of Insurance podcast, just go to future-of-insurance.com, and you can get access to all of that. The books are also exclusively on Amazon in paperback, hardcover, Kindle, and Audible. So you can take them in however you like. You can find them at Amazon. Just search for Future of Insurance. And with that, I will leave you until next time. Thank you to Fro. Thank you to all of you. And it's a great way to kick off the 5th season of the show. Take care, everyone.